Hello everyone. This is a lesson on which accounts do debit and which accounts do credit. This lesson will help us to decide which account do debit when what happens and which account do credit. So we have two acronyms. The first one is DED and the next one is CLICK. So DED stands for, the first D is for debit. E is for expenses. A, asset, and the last D is for drawing. Okay, so what does it mean? You debit expenses, assets, and drawings when they increase. When they increase, you debit them. Okay, and then the inverse is correct. When they decrease, you credit them. But you debit them when they increase what? The expense, the assets, and the drawings. Let's do the other acronym. The next acronym is CLICK. It stands for credit, liabilities, income, and capital. Now, you want to credit liabilities, income, and capital when they become more, when they increase. So, and then when they decrease, you debit them. Let's look at examples. Okay. Now we're going to look at examples to explain our concept. The first example, it says the owner invests in a business by depositing 20,000 cash. So when the owner deposits into the business is capital. So capital is under CLICK. CLICK, when it increases, you credit it. So when he deposits 20,000, the capital increase. So our detail is capital, and it increase. So we're gonna credit it. So we're gonna credit the capital with 20,000. The other account that is involved is, they say he deposited cash. So is the bank. The bank is an asset, is in this debt side. So the bank is gonna increase as well. The money is deposited into the bank, so the asset will increase. So when asset increase, they are debited. So you're gonna have bank, and is gonna be debited with 20,000. Okay, let's look at the next example. The second example, made EFT, which stands for electronic funds transfer, meaning that you pay electronically, payment to Elliot to pay telephone account, 4,600. Because he is paying the account, what will happen to the bank? The bank will decrease. The money in the bank will decrease because it will go to Elliot. Okay. The bank, is it in the debt or in the CLICK? It's in the debt because it's the asset. So in our detail, we'll have bank, and then our bank is gonna decrease because we're gonna pay this amount to them. So in this, we debit when it increases. Because it decreases, we're gonna credit. So we're gonna credit the bank with 4,630. Now, telephone is an expense, and the telephone increase. So when we look at is in the debt, the expense are in the debt. When the expense increase, we debit them. So we'll have our telephone is our detail, and then 4,630. Okay, let's look at the last example. The third example, bought trading stock on credit for 26,500. Trading stock is an asset. So, and the trading stock will be increasing. When assets are increasing, they're in the debt, they're gonna be debited. So we're gonna have in our details, trading stock, and then it's gonna be debited for 26,500. And then they are bought on credit. So it means our liabilities are affected. Our liabilities, they're gonna go up. They're also gonna go up because we are buying on credit, 26,500. In our detail, it's creditors control. Okay, and then it's our liability is increasing, so we to be credited. We have the 26,500. When you look at our accounts, they affect two accounts, and at least they will affect two accounts. So I hope you practice this and then get it right. This, you need to know this to be good in your accounting. Thank you for watching.